what tokenization allows, and the internet, is it allows people to use gold for both a store of value and as a medium of exchange, because it's actually better than the dollar at that too. But now that you have this technology where people can instantly transact in gold just as easily as they can in dollars, and in fact, you don't even need a banking system now. You can do commerce, you can engage in commerce without even having a bank account. You can have an account where you have your gold, or you can have your tokens in your wallet, and you can have as much functionality as if you had had a bank account. But you don't have to pay for a bank account, and you don't have to be a creditor of a bank. When you have a bank account, you've loaned your money to the bank, right? Now, you count on insurance, government insurance, to protect you, but you really don't have much protection because inflation is going to wipe you out. But with gold, you don't have to worry about inflation because nobody can inflate gold, right? One of the biggest, tells about what's going on there is their average cost on their Bitcoin. Their average cost is just over $76,000. And even though we had a 10% rally today, Bitcoin is barely above 70,000. So MicroStrategy is down on its Bitcoin that it's been buying over the last 5 years. Imagine if Strategy had bought gold or silver instead of Bitcoin, how much more the company would be worth, because they actually would have had a big gain on their investment. Instead, they lost on their investment. But, of course, had Michael Saylor told people that he was going to buy gold or silver with the money he got from selling stock, he wouldn't have been able to sell all that stock at a premium because nobody really wanted to buy gold and silver. They wanted to buy Bitcoin because they thought it would have a great return. Well, they thought wrong. It had a lousy return. In fact, if Saylor had just put all of his money in a money market, remember, his big pitch on why he needed to buy Bitcoin was that he was losing all this money to inflation. He couldn't just leave his money in cash and earn 4 or 5% interest because inflation was higher than that. And so he had this big problem. What am I going to do with all my cash? Because I'm getting hit by inflation. Now, the obvious solution was buying gold and silver. Had he done that, he would have had a great inflation hedge. But instead, he came up with a harebrained scheme of buying Bitcoin.
Bitcoin has long been promoted as digital gold, but reality has diverged from expectation. While Bitcoin soared, traditional gold remained sideways, reinforcing a perception that physical gold was obsolete. Investors chasing crypto returns missed that gold's real-world value remained stable. When macro shifts like the dollar weakening emerged, gold surged while Bitcoin faltered. The pattern reveals that Bitcoin's volatility undermines its reliability as a store of value. The narrative of superior digital gold is crumbling, highlighting that true wealth preservation depends on assets grounded in intrinsic value rather than speculative promise.
And not only did he not keep up with inflation, he didn't even keep up with the money markets. He didn't even keep up with taking his cash from his balance sheet and stuffing it under his mattress. He lost. He has fewer dollars. After 5 years of buying Bitcoin, Strategy has less cash to show for it than if they had done absolutely nothing with their money. So he made the problem that he claimed he had even worse with his cockamamie solution. Meanwhile, I bet you one of the reasons that Bitcoin rallied so much today is that Strategy was a big buyer. We'll find out on Monday, as we always do, how much Bitcoin Strategy bought. But I bet they bought a lot of it, and they did it all today, right? But by next week, I expect the price of Bitcoin to be lower, maybe quite a bit lower. The same thing with Strategy. But all this, I believe, is going to be bullish for gold and silver. Because I do think that for many years now, the Bitcoin, promoters have created a cloud over gold and silver. That Bitcoin was being promoted as superior to gold, not just digital gold, but something that's better than real gold. that whatever you think real gold is going to do, digital gold will do it better. And so people were buying Bitcoin who might otherwise have bought gold.
Recent innovations in tokenized gold are reshaping the landscape. Unlike Bitcoin, tokenized gold represents actual physical gold stored securely, with the token serving as a digital claim. Ownership is real, transferable, and instantly usable for commerce, remittances, or payments. Projects like Tether Gold demonstrate the growing integration of blockchain with physical assets, bridging convenience and security. Investors can now transact globally without moving physical gold, maintaining both store of value integrity and liquidity. As crypto adoption matures, tokenized gold addresses the shortcomings of Bitcoin, providing a stable, trustworthy alternative for those seeking digital assets backed by tangible wealth.
Because they thought they were doing something smarter, something better. And the fact that gold went sideways for so long just reinforced that idea, because it was being reinforced by the market itself. Gold was doing nothing, and Bitcoin kept going up. So that was validating the thesis that gold's time had passed, and the new times belonged to Bitcoin, right? Gold was dead, long live Bitcoin, right? And I kept saying, no, that's not the case. And that was proven last year when the de-dollarization trade really came into being on Wall Street. People appreciated why de-dollarization was taking place, why it was just getting started, and you saw the big move up in gold and a corresponding decline in Bitcoin. And in fact, when gold finally had that big correction, all the Bitcoiners came out and said, aha, now it's gold, it's Bitcoin's time. All the money that was coming out of gold and silver, now it's going to rotate into Bitcoin. And you know what happened to Bitcoin? Then it collapsed again. So Bitcoin went down when gold was going up, and then it went down when gold was going down. That means the bubble has popped. The only question is, how much longer is it going to take the air to come out? But the writing is on the wall. Look, even Tether can see that. I just put up on the Schiff Gold channel and my main YouTube channel the debate that I did with Saifedean over the weekend in El Salvador. It was a Bitcoin gold debate. I decided to make it a Bitcoin Tether Gold debate because before they had us on, a couple of hours earlier in the day, Tether ran a big promotion for their gold-backed token, Tether Gold. And I thought it was an excellent promotion. And so since we were at the Tether conference, I decided to focus more on Tether Gold than what I'm doing with T Gold, which, is the same letter. But it's the same concept.
Stablecoins are gaining traction, yet dollar-backed tokens fail to protect against inflation. Companies like Tether are pivoting toward gold-backed tokens, combining the security of precious metals with digital functionality. Tether's acquisitions in precious metals retail and royalty companies illustrate a convergence of physical gold with tokenization. This shift enables instant, borderless transactions, bypassing banks and traditional financial constraints. Tokenized gold offers an alternative medium of exchange while preserving purchasing power. As attention in crypto turns to stablecoins and tokenized assets, gold emerges not just as a store of value, but as a versatile financial tool.
That if you really believe in tokenization, if you believe in crypto and you want digital gold, then you can have digital gold. You don't have to settle for fool's gold. You don't have to settle with a counterfeit imitation like Bitcoin. You can actually have digital gold. You can have something like Tether Gold, or there are a lot of other companies. In fact, while I was down there, I ran into 2 or 3 other people that had their own tokenized gold projects that they were doing. There are so many of them. I talk to these people all the time. This satisfies the real demand. Tokenized gold does what Bitcoin can't. Bitcoin promises, but it can't deliver. Because tokenized gold is digital gold, right? It's real gold. The token is just the digital representation that you own the gold. It's not even, you don't even own the token. You own the gold. The token is your claim check. It's like if you go to a restaurant and You give them your coat, and they'll give you a ticket, right? You don't own the ticket, you own the coat. The ticket just lets the the coat check person know that it's yours. When you give it to them, they go and find your coat. That's what's going on with tokenized gold. You're not even loaning the gold to the company that issues the token. It's your gold. The token just lets everybody know it's your gold. And the most important part about the token is that it's negotiable, right? If I could give my claim check to a buddy and they can go and get the coat and put it on and wear it, right? They're not going to check the ID. As long as you got the ticket and you go, they're going to give you the coat, right? So the ownership of the coat goes with the claim check.
The market is correcting misconceptions. Bitcoin's peaks and collapses contrast with gold's steady resilience. Investors who rotated between gold and Bitcoin saw Bitcoin underperform repeatedly. Tokenized gold further amplifies gold's advantages, offering digital convenience without speculative risk. Unlike Bitcoin, it cannot be inflated or devalued by policy. Global investors, particularly in emerging markets, are increasingly recognizing gold's dual role: a safe store of value and a practical medium for digital commerce. The Bitcoin versus gold debate is evolving. Gold is no longer just a hedge. It is becoming a modern, adaptable asset ready for the digital economy.
Well, it's the same thing with tokenized gold. I have tokens that represent gold ownership. If I want to give either as a gift or as payment for services or a remittance that I'm sending back to my family, if I want to send money to somebody, I can send gold. I don't have to send the physical gold. The physical gold sits in a vault. In the case of Tether Gold, it's buried deep in a mountain in Switzerland. Pretty safe place, right? You don't have to go to Switzerland and dig your gold out of that vault in that mountain. All I have to do is send somebody the claim check so that now they own the gold that's in that mountain, right? And they don't have to get it. They could give it to somebody else. So as people start to realize this, right? Because one of the new aspects of crypto that is really being promoted is stable coins and tokenization. What is a stable coin? It's tokenized currency, tokenized dollars, tokenized euros, right? So you can have that. You can have a tokenized dollar, but why? Why the hell would you want to tokenize a dollar? If you're going to go to the trouble of getting a token, why have it backed by dollars? The dollars are going down. You don't solve the problem of getting out of the dollar if you buy a US dollar stablecoin. Tether knows this, right? They're the biggest issuer of US dollar-backed stablecoins, yet they're now the biggest buyers of gold. In fact, they just bought gold.com. They didn't buy the whole company. They bought into it, which used to be Amark, which changed its name to its website, gold.com, and they bought into that, and they own a number of other retailers of precious metals. So now you've got Tether not only in the tokenization business, and Tether has been the biggest buyer of gold stocks. They've been buying a lot of the royalty companies in particular, a lot of the ones that we own.
Tokenization transforms how we interact with wealth. Digital gold enables commerce without banks, interest rate exposure, or inflation risk. With ownership verifiable and transferable on-chain, gold becomes both a currency and a long-term investment. Investors can gift, remit, or trade gold globally, all while retaining physical backing. This revolution addresses Bitcoin's limitations and restores trust in digital assets anchored in tangible value. As financial technologies mature, gold's digital transformation positions it as a cornerstone of wealth preservation in the 21st century. Real value, liquidity, and security converge, showing that digital gold is more than a promise. It's a practical reality.
In our funds that I own personally, but now they've made their first foray into the retail of physical precious metals. So they're kind of bringing together physical precious metals with their token, which is exactly what I'm doing with T-Gold. It's the same idea. They're just obviously able to do it on a bigger scale. But as the attention in crypto is focused on tokenization and stable coins, this is the perfect time for gold to shine and the perfect time for gold to show that it can do what Bitcoin can't, that it can be digital, that digital gold is not Bitcoin. Digital gold is gold that's owned or the ownership is recorded digitally, so that if I want to engage in commerce, I can do so with gold. One of the reasons that people haven't used gold over the years is because it wasn't convenient. It was more convenient to use dollars than to use gold. But what people have done with gold is used it as a store of value, because there it really outshines the dollar. If you hold dollars, you're not storing anything. The dollar is losing purchasing power, as referenced or explained with the Dow. You can buy a lot less of the Dow today than you could 25 years ago if you have dollars. But had you been saving your gold over the past 25 years, you could buy a lot more of the Dow. The Dow is cheaper for you if you save gold. So people recognize that the dollar is good as a medium of exchange, but it's lousy as a store of value. So what do people do? They use dollars as a medium of exchange, but they use gold as a store of value. But what tokenization allows, and the internet, is it allows people to use gold for both a store of value and as a medium of exchange, because it's actually better than the dollar at that too. But now that you have this technology where people can instantly transact in gold just as easily as they can in dollars, and in fact, you don't even need a banking system now. You can do commerce. You can engage in commerce without even having a bank account. You can have an account where you have your gold, or you can have your tokens in your wallet, and you can have as much functionality as if you had a bank account. But you don't have to pay for a bank account, and you don't have to be a creditor of a bank. When you have a bank account, you've loaned your money to the bank, right? Now, you count on insurance, government insurance, to protect you, but you really don't have much protection because inflation is going to wipe you out. But with gold, you don't have to worry about inflation because nobody can inflate gold, right?